Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and we are entering or about to enter a very exciting week. So, this is our weekly webinar, and of course, I want to welcome everyone back and special welcome to the new people. And for those of you that this is the first time, if you can read the title, a weekly trading plan, it pretty much says it all. What we're trying to do here is to create the structure, to create a more organized way that we approach trading. As you know, not just in trading, but anything in life, if you spend a little bit of time of preparing yourself and planning your actions, you might actually have better chances to succeed. And that's what we do here. And then that's what I like to say every time, as the traders say, you plan your trade and then you trade your plan. And that's exactly what we're trying to do here. Few things about myself. This is me, Simon Friedman. I'm Senior Account Manager with AvaTrade. My overall trading experience, actually 23 years now. As you could see, I changed the number from 22 to 23. I started in June of 2000, and time flies when you're having fun. And I've been trading since then. For the first 11 years, I was a licensed proprietary trader. Intense way of trading, and then I moved on into a less stressful environment, and I started to mentor and educate other traders. And currently, I'm very happy that I have an opportunity to assist our customers at AvaTrade. Now, the agenda of the webinar is pretty much the same every week. We talk about indices, stocks, commodities, Forex. And we, before that, we're trying to see the big picture of what's happening, what the upcoming events are, what the general attention or general focus on things in financial markets. And a risk warning, you can find a full statement at avatrade.com. Everything we do here is pretty much educational. We not suggest any trades, of course. And these are the channels that I highly recommend for you to subscribe to. You have Telegram, you have Twitter, and my favorite YouTube channel, where you can find a lot of educational material. You can find tutorials. You can find webinars, including this one. If you miss a live webinar, you can always go back and find it at our library here and watch it at your convenient time. So you can subscribe, you can click on that bell, and you'll be notified when new things are being added. Now, before we go into economic calendar, let's try to understand what the market is focusing on. So we had the debt ceiling, a threat, and that kind of behind us, and the market reacted in a positive way. Banks are reacting in a positive way. We'll take a look at the shares of those companies in a moment. And we have a main event of this week, which is on Wednesday, when the Feds, after 2 days of meetings, will announce their decision as far as the interest rate and monetary policies. And before that, we'll see the inflational numbers. So that's the whole focus. And as you will see in a few minutes, when we go through the instruments, market is kind of waiting to see, what that decision is, which way do we go from now. And that's very serious. That's why I said, I hope that you're enjoying the weekend and getting energy. We have a very exciting and intense week in front of us. So let's go into the economic calendar. What I do here, I take out the high impact events. Again, for new people that are not familiar with economic calendar, you can find it at our web trader or the app or any provider of economic calendars. It's a public information. There are no secrets here. It's important to know the certain things are being announced or released, so you won't get caught by surprise. Again, some people like to trade the actual economic calendar. They like the volatility. Some people try to stay away from it, just waiting till the dust settles and then pick the direction. But the idea doesn't matter which way you are trading, just the idea of knowing the certain things are coming out at certain times and days, it really helps to prepare yourself for that. So again, I took out the high impact here. You can filter through things. You can find things that are relevant to the markets and countries that you're trading. So Tuesday, we have employment numbers from UK, we have CPI numbers from Germany, and we have very important CPI numbers from US, which is definitely going to be watched closely by the Feds in their decision the following day. You have Governor of Bank of England speaking on Tuesday as well. Wednesday is the day. So the times are here in GMT. So 6 p.m. GMT, the Fed's decision, and it's being followed by the press conference 30 minutes later. Key event of the week, of course. Then we have GDP numbers from New Zealand. Thursday, we have employment data from Australia. We have retail sales from China, another bunch of data. As of now, Chinese data is not so strong, as you could see in the moment. The Chinese market is not doing that great. We have another interest rate decision, also a key decision here from ECB, and that's on Thursday. We have retail sales from ES following that, and we have a press conference of European Central Bank following the decision at 12:45. And Friday, we have another opportunity for Bank of Japan to do something with interest rates. Everybody's expecting them to do something, even though the consensus is no change. But still, somebody or some people or some participants are hoping that the Bank of Japan will do something in order to increase the value of Japanese yen by increasing the rates. So that's on Friday. And we have a Michigan Consumer Sentiment Index on Friday as well from US. So these are the things to pay attention to the upcoming week as far as the economic calendar goes. And of course, I like to prepare these things for you. As you know, there are a few screenshots here. You can find it on marketwatch.com at Barron's Publications. You can see the article, you can read into it. So here, stock market gains as well worry crumbles. What happens next? I like these questions. They're provoking you. They're trying to see what's next. So please take a look if you'd like at the article. And another one, what the S&P's 500 new bull market tells about what's to come. Also interesting article. You can look into it. What they say here that S&P's entered the bull market, that means that we recovered 20% from October's low, and that's technically means that we're in the bull market. We can run higher, we can cool down, who knows? And I think a lot of it will depend what the Feds are making their decision. How are they deciding about the interest rate? And you'll be hearing me saying it a lot today as we go into the instruments. Okay, so let's move into the trading platform. We'll take a look at the instruments. We'll start with China. As I mentioned, Chinese data is coming out not so great. The economy is not doing so great. They've been suffering a lot. And then we had a little bit of recovery when they started the zero or they canceled the zero COVID policy. We had a nice run, a lot of optimism, and then we came back. And as you know, we mentioned this 13,300 level. We had a lot of actions around it. And then we broke through the support of around 12,800, and then we went lower. So the latest data is the imbalances or balances in between import and export. The export numbers are really shrinking. And as you know, China, you can call it the world factory. A lot of things, if not most of things, are being made in China. Anything you consume, you buy. You can see the label there, made in China. So as the economy is not doing great, it just shows that maybe things in general are not so great of the companies, the producers, the sellers, and so on. So that's as far as China has been really struggling. And with that, you know, I usually mention crude oil and copper with that. So crude oil is also selling. We are back to $70. We'll talk about it a little bit more when we get to commodities. And copper had actually a nice move to the upside, but we hit the 50 moving average here. We bounced to the downside. So that's as far as China. Now, in contrast with that, Nikkei is moving higher. It's having a blast. It's really enjoying the low yen, which is good for the local companies, as whatever they sell or they exporting, it's really being affected in a positive way on the cheap local currency. But on the other hand, everything they are importing, it comes really expensive. So let's see if this time around, the Bank of Japan will do something as far as the interest rate changes. So that's Nikkei. Now, U.S. indices. U.S. indices had a nice run. And Dow Jones, let's take a look really quick on the numbers. Dow Jones rose about 0.1% on Friday, and for the week, it rose 0.3%. And we are looking strong on here. Again, as I mentioned, that this week Fed's decision will be really affecting everything, and especially U.S. indices. Now, S&Ps rose also on Friday 0.1%, and for the week 0.4% gain. As you could see here, also fourth consecutive week to the upside. Nasdaq is being the strongest lately. It's seventh consecutive week to the upside. It gained 0.2% on Friday and 0.1% for the week. So all three indices are being strong, and they are nicely recovering. And as I mentioned to you, since the threat of the issue with the debt ceiling was behind us, the market reacted in a positive way. Also, some tech companies had a nice run. We'll be taking a look at them at the moment. And of course, European indices, let's take a look at them. They're not doing so great. And this is FTSE, the UK index. We are sitting, or we are testing the 200 moving average over here. Definitely it looks weaker than US indices. DAX is actually holding strong here. And let's see how this week's decision as far as the interest rate from European Central Bank, how it will affect DAX. French index had a little bit of a sell-off. We are in the three consecutive weeks to the downside. We broke below the previous level of support. There was a resistance back in January of 2022, and that's 73.82. We had two consecutive weeks closing below it. It looks a little bit weak from that point of view. So that's as far as indices. Again, U.S. indices and the global indices, of course, will be affected by the Fed's decision, and then, of course, DAX will be affected by the interest rate decision from ECB. And definitely Nikkei, as we mentioned, that it's enjoying a nice run. It might be affected if there will be a surprised decision as far as the increase on interest rate from Bank of Japan. Okay, let's move to individual stocks. And I want to start with Boeing. That's as you could see here, a lot of accumulation. Boeing is setting up for something possible move to the upside or going down to retest 196. We've been really channeling here for a long time. So you could see on the monthly chart, 1, 2, 3, 4, 5, 6 months, half a year, we're pretty much in the tight channel between 196 and around 218. Boeing had a brief sell-off over here when there were some technical issues with the 787, and then it was a recovery. I didn't follow the fundamentals. I don't know if they dismissed those issues, but we are retesting the resistance here. Now, last week we spoke about a few stocks that I want to bring up, and we'll take a look how it played out. We spoke about Google fighting resistance around 125. Google actually moved higher to around, where were we on Wednesday, as high as 128.95, almost 129. And the same day, we really sold and closed at the lows around 122. And since then, even though the market went higher, Google didn't really have any energy to move higher. So that doesn't look that bullish here. Let's see if this sell-off on Wednesday continues, or we will find some support and move higher here. Netflix continues higher. There's some publications saying that this new model of subscription works out, and the analysts are very positive about it, about the new system that Netflix is implementing in new subscriptions, trying to cut or crack on the password sharing. So the stock has been strong. On the weekly chart, we just closed above the 200 moving average. We are looking nice here. There's a possibility of continuation. Again, it all will depend as well of what the general market is doing. Tesla, it's been super strong. As we mentioned, if you remember, I said the moment the CEO of Twitter was appointed that the Musk will be focusing mostly on Tesla, and that would be positive for the investors, and that's exactly what happened. The stock has been strong, and fundamentally just the new development that actually Tesla adding GM vehicles to the charging network. So that's another revenue for Tesla. Fundamentally, things look good. Analysts calling, of course, Tesla the king of electric vehicles. Others are kind of catching up. So a nice action here. If you take a look at the weekly chart, a nice curve to the upside. We are above the resistance that we faced in October of last year of around 233. And the stock is in the vertical to the upside. Let's see if that continues. We spoke about AT&T, and some analysts saying setting up the price target at 17. The stock reacted last week, as we mentioned. It went higher. It went to $16. Very nice move to the upside. It's pausing here, not really selling. So let's see if we are continuing higher to 17 mark. Johnson & Johnson, we spoke about, the pharmaceutical company. We said that 154, around 154, 153 was a support. We had a nice move. We are facing the resistance here for now, around 160. We hit the 50, and we're between the 50 and 100 moving average. Let's see if that move continues to the upside, or we might come back down and look for confirmation of the support. We spoke about also Teva Pharmaceutical. As on the weekly chart, we are fluctuating percentage-wise. These are huge moves between $7 and $11. So the traders are trying to catch the same wave. Again, as you could see here, we established support around $7. We had an attempt to move higher, and the last 2 days was sold. So let's see if that scenario works out, or we might retest the 7 and see how we're acting around there. Now the banks been really strong since that debt ceilings of the issued off the table. JP Morgan being the strongest one. It's holding nicely here. We're preparing for possible continuation to the upside. As you could see, this is the weekly chart after this huge move on the week of April 9th. We had a nice consolidation and possible continuation to the upside. The others are not as strong as JP Morgan, but they had a nice move. Citibank had a nice recovery here, more than 10%, it looks like it. Bank of America as well. Goldman Sachs trying to recover over here. So the banks look positive. As far as the debt ceiling issues off the table for now. And of course, the Fed's decision this week will be affecting the whole market and the banks specifically. So that's as far as stocks, and let's move to commodities. We mentioned before the crude oil moving down on China news or China weakness. So we are back at 70, retesting this level. Let's see how it plays here. Of course, a lot of aspects there. Definitely on the supply level. Last time when the Saudis announced the cut in production starting July, I believe, or August, I'm not sure exactly. We had a nice move to the upside, but then it didn't last. We had a sell-off straight back to $70. So that's on the supply side. On the demand side, Chinese news are not so great. And again, US market is strong, but we'll see this week after the Wednesday's decision what's next in the equity markets. So we might see the U-turn here moving higher, or we might see the move to the downside, breaking the 70 and going retesting the lower level. So that's as far as crude oil. Copper, we mentioned, it moved higher, but it bounced off the 50 moving average here. So, and it closed lower on Friday. Let's see if that move or reversal continues to the downside. Now, gold is waiting. As you could see, this level is being really being intense fight between the buyers and the sellers. We closed on Friday in 1960. This 1955 level has been really going up and down. We've been bouncing off the 100 moving average here. So the whole focus is, of course, on the Fed's decision when it comes to gold. Sugar, we spoke about sugar a few weeks back. As the supply is short and demand is high, the sugar had a nice run. We had a nice correction here for about 4 weeks, and this past week is the first green week, so maybe we're ready to go higher. Based on the Thursday's price action, we just erased the previous pretty much week of the selling. So we'll be watching sugar of possible continuation to the upside, or the opposite. We might come to $24 and see if we're holding that level before anything else. Another champion is cocoa. It's been super strong. If you take a look at on the monthly chart, 1, 2, 3, 4, 5, 6, 7, 8 straight months to the upside. And if we are continuing higher, we might have difficulties around this level, around 32, 35, if we hit there. So we'll be watching that. It looks very strong. Every correction, we keep on making higher highs, higher lows, every correction and consolidation being followed by the new highs. So let's see how cocoa plays this week. So that's as far as commodities. Let's move to Forex, and we start with dollar index. As we mentioned, dollar index was holding around 104. This week we closed 103.50. We are holding this level here, and again, it's all in anticipation of the Fed. So far, there's a 70% probability that the Fed will not increase this month. Some calling it a pause, some calling it maybe they'll stop it or lower. But there's still around 30% possibility there will be an increase. Now, the past two surprises we had from Australia and Canada, those two banks actually increased it by surprise. So the currencies went up. We'll take a look at the moment. So some analysts are saying that Feds are also, there's a possibility of it happening. And if that happens, the dollar might run nicely to the upside and the markets are going to sell off, but we will not know it until it happens on Wednesday. So as far as those two commodities, they've been strong. Canadian dollar reacted nicely to that surprised increase in interest rates. There's a sell-off in USD CAD. Also, Australian dollar has been strong. We are above all moving averages here. We might continue to the upside. It was a nice recovery on Australian dollar. Now, Japanese yen is remaining weak. Again, this week's decision we have, of course, on the Feds and also on Bank of Japan. Let's see if anything changes this week. And of course, all over the news, you have Turkish lira. Turkish lira is at the all-time lows. You have dollar, Turkish lira closing at 23.32. A huge weekly move, as you could see here. And it's all about the policy, and it's all about the post-election things. Some were hoping that Erdogan will step down and the new president will have a different policy support, but it didn't happen. So Erdogan is remaining as a president and his policy remains the same. No increase in interest rates. So as you could see here, the TRY is super, super weak. Another one is ZAR. A South African currency. It's been regaining some strength after making all-time highs. That was on the 1st of June. We almost hit 20. We were at 1991.40. And since then is a free fall on the dollar against ZAR. We below the 50 moving average here. Nice recovery for the ZAR. Let's see at which point we'll stop and turn around, or we might continue. In any event, around here, we have both the 100 moving average here around 1851, and we also have a support around 1850 as well. So we might see support there if we don't turn around before. So that's as far as ZAR. And the last pair I want to bring up is the Euro Aussie, the one that we spoke for a while about, that every time it hit this level, 162.25, it turned around, it came back, it turned around. This time, it didn't work out. Some buyers really got disappointed here, and it's all related to the strength of Aussie with the surprise interest rate. It just broke through, and we are continuing lower with a possible attempt to retest the 200 moving average here, and also it's with the support around 158.50, 158.47. So let's see if we are continuing, how we acting around these levels here. So that's as far as the FX. And let's take a look at Bitcoin. And again, we can speculate and analyze and try to predict things. And as you could see here, we are trading between 25 and 26,000. It looks like we're holding this level. And fundamentally speaking, there's a war between the regulators and the brokers or providers of the platform for the trading. They're suing each other. It's been going for a while. And let's see how that will work out. As we mentioned a few weeks in a row since the whole FTX issue and other brokers and so on, the regulators are really trying to impose tight structure and regulations on this. And let's see how that plays out and how it will work out for the cryptocurrencies. That's it pretty much. Again, we are having an amazing week ahead of us. I hope that you enjoying the weekend and getting some energy, preparing yourself for some actions. I want to wish everyone a successful and productive week. And just to summarize things that we spoke about, we have the major things, the Fed's decision on Wednesday. Tuesday, we have the inflation data that's being closely watched by the Feds, together with the employment numbers, of course, and the economic situation. And that will actually start or establish the direction in the market. We might see continuation in the equity market to the upside. A surprise interest rate hike from the Feds might spook the markets, and we'll have a sell-off, and then we'll have a run on the US dollar to the upside. So it's going to be really, really an interesting week and intense week. I want to thank everyone for attending the webinar. We'll be back next week. Have a wonderful and productive week. All the best. Take care.